Hello traders, welcome back. In this quick demo, we are just going to use free tools out there in every platform and see if you can get some more daily profits in your pockets. We have two charts here. One is on the left side behind me. It is using SPY 15-minute chart, and one of the indicators we are using is volume profile, and we are using a 2-day profile, which means it's going to look at 2 days and it is going to create the structure we need, and that's the only thing we have here going for us. The rest are simple things. Again, I will just explain. So what we have here is Heikin-Ashi. You can find that indicator anywhere on the internet as well if you don't have it, and this is a weighted moving average, or you can also use simple moving average. It is 9 period. That's it. So what are we doing here? We are using SPY as a bias meter to trade in a specific direction, and the data has been smoothed by the Heikin-Ashi chart, and that's all there is. Don't worry about the signals up and down. It means nothing. So that is your chart which drives our things, and you should know about what profile does, where we are in 2-day metrics of profiling. Where are we in context of that? So it gives us an idea. If we are at the top of the previous 2-day, we're expecting some shorts possibilities and the long possibilities when we are at the bottom. So we are looking at the last few days of the context. So that is it. So that sets up your profiling. You get a Heikin-Ashi, you put a simple or weighted moving average, 9 period, and you have everything going for you. So what we do on the right side is, this is ES chart of 5 minutes, and on the bottom we have a dollar tick chart, which is NYSE ticks. We are looking at extremes of those ticks. We're not looking at anything else. You would like to put some moving average, you can, to see the drift, but you can see what we want to do is create some horizontal lines here to mark the extremes. Oops. Plus 1000 minus 1000, and then we also do a standard which is 500, and there we go, we have a matrix. Now, so what is the way to trade this? This system is ready now. We are going to just look at where the bias is. Bias turned upwards in SPY. I'm just looking to go long. And how do I go long? The market opens, and you can see this is where the ticks come into picture. When the trend is up, I'm using this as a pullback. This one gets us the entry potential long because the bias is long. And then again here you can see the top. Here we had another possibility of that we may go long, and here is another possibility of going long. Here is another possibility of going long, and you got enough trades for that day. Let's check out. So let's go back here. One thing you can also notice, if the ticks are staying, you can see the two things can happen when the market is at the extreme. When market opens at the super extreme early morning, it could have two things. That is where it is challenging, because if 1000 stocks are ticking to the top side, it could be the trend which can continue on, or it could be a reversal, right? So this is where your measurements and C54 and other things come into picture. As you can see here, the ticks open too excitedly on the top side, and the market makers moved it down, and then since the trend was up, we'd start taking the pullbacks trades. So these two lines are nothing more. Then 9 and 33 weighted moving average. It has no other meaning than just keeping you in the trade. And then there's also pullback events. First touch event, crossover happens. First touch of 33 is usually a good possibility. So early morning or late night, I think this was showing a drift. As you can see, you got a drift, but there's no ticks at that time. This is only for New York Open. So let's go and check yesterday. So here at early morning, we had the sentiment change. And then what we can do is sentiment changed at the open. Now this is going to pull back, let it settle down, and we are looking for the market to go to the other side. If market is going to keep going down, we are looking for a pullback in the ticks to get us to a good entry. So where are the possibilities? So we will love to have 1000 or higher. Right here it came down aggressively, minus 1400, came up. The war is going on, as you can see, the top. So the intention has already been shifted to the downside. This is where big huge thing happened, and then retest happened, and it happened at this tick level, right? So this is where you can get excellent entries. So if you want to go, the problem happens when people see this big bar and they try to short it here, but look at the tick. So let it go on the other side. So you unnecessarily got stopped out. Intention was correct, the bias was correct. And what else came out of it? This is another one, early part of it. And then the second trade came here, third trade came here, and they are getting 15 points. Just you have to be a trader to manage your trades. So let's look at one more example on Wednesday. Wednesday, early morning, before the open, there was no ticks obviously, but the drift was showing is going long. You may have other ways to go long. When then market opens on the long side, ticks go up to 500. We don't have any, so to go long, we want this guy to be on the bottom side. So this is where you got some long entry. You could have gone here, we don't know. You got your 5-point scalp. So we are going anti, I mean at this point the trend is up only, but we are trying to use this tick magic, right? So S&P is still saying stay long, and it's drifting. Obviously it's going to change the direction. We don't know yet. We don't have the right side, right? We don't know. It's going to continue to go like this or gone like this. So it turned on us somewhere here. So we probably got lucky with one trade, and you see this is happening. Okay, what to do next? So we have to wait for this guy to go on the other side. Once we have a confirmation that we are going to go short now. This is where the crossover happened and the 33 retest happened of the 33 line on the other side. Look at the tick. And then look at this tick, right? This is how you use moving averages effectively. After the cross, it's a reset, first touch, second touch, and then nothing should be done. And there you are. These ticks on the other side used as pullback gave you precise entry. and that's the noon session start later on. What else came in? We had a one extreme where this extreme came, but S&P was still saying to stay short, right? This extreme exhaustion put the bottom in. Remember, we are using this Renko, and this is 15-minute chart. You can go to 5 minutes. It'll get more aggressive. And let's go to Wednesday. So this is where you have to have 15 minutes, 5 minutes. You can do the same setup on two different situations. So here you can just see 15 minutes will give you like height. You need two time frames to trade, 5, 15, 15, 1 hour at least. So this is where the short came, and you can just short it here, short it here. We already discussed that. Short it here, and then you will have one loss when the trend is shifting because you keep shorting, and you came here to short again. But you can see there is a shift of shift is coming. So this band is telling us the early shift is coming. Remember, Hakinashis are average bars. You can create your own Hakinashi. This is average bar, which means this is not a true representation of price. We're just looking at this as a drifter, direction drift. This is all fake. All you see here is fake. This is nothing real here. This is all synthetic price giving us the noise free trend. So early entry came here. So this one put the top, but we were not going top. We were going short only. So we went short here. We went short here. We should be done by making 30 points. We should be done. If you want to continue to trade for whatever reason, then you have to wait for the trend, and then you'll have one loss. So here another trade came. Now you may have a C54 reflection coming up here, which we saw the video last time, and we see, okay, potentially this may be a turning point. And we were desperate, hey, you got to do one more trade, but this is way too high. It still gave you some 5 points. This is a 9-point move, so you still got it. Now this guy has turned over, moving average, and this is tipping over. Now I'm going to be cautious about going short. I won't be taking shots. So I need to now wait for the pullback of the ticks on the other side. It's already late, probably nothing happened, and probably we had a good day already. Let's do one last one, Tuesday. Okay, there it is, Tuesday. So early morning drifts, this is a really beautiful thing. You can check it out. Hopefully it helps you. Tuesday, 7 o'clock we can start. Mostly people come to business around that time. So at this point we already had a drift that, hey, this is drifting up. Okay, we don't know how long it will last, but we have to take some bias. So wait for market to open. It opens here. Now this opened at the drift is up, trend is showing, is synthetic trend is showing up. So what we do, wait for this guy to pull back right there at 500, and you make your trade, and you make 10 points, and you should be done. So if you are using some third-party accounts, 10 accounts, and you make $300, $500, 10 accounts, you're up $3,000 to $5,000. That's the precision you have to build. So let's say we continue to trade. We still have to wait for the longs only. So this one is another long. It came down. I'm not taking shots. Pull back long, pull back long. So this is a long. When it hits 500, it could have gone down. We don't know, but we are hoping that it will stay there. And there we go. Take the hit. This is it. Mother. Now after any, once, twice a day, they will go to the extremes too. As we have been seeing this, twice a day they will go to the extreme. They have to, right? Now this is extreme. Now we don't know where the trend is, so let's look at the trend. So this pullback. At this pullback, it was not a long, right? So we got two good trades. Now we're waiting for another pullback. It happened here, then it happened here. They're all working. We're still on the long side. Now we have run up a lot. If I do my projections, I think this could be a reversal area. We don't know that yet. So we are banking on this Heikin Ashi to help us, right? So this happened, and okay, did I get a short trade during this time frame? No, this is going to be a loss. This was another short trade, but we were not ready, right? So we're not ready. These chops can happen. During this chop, I wanted to go short. Short came here, did not work out. And this is what I was trying to say, that this could also be initiating a new trend. This is where it is difficult to see. Are these extremes ending the trend, as you can see here, or they're ending and starting a new leg up? But we have locations. That's what we are worried about. Okay, so now it trend went up again. What we do? We wait for pullbacks. This is a good pullback. Reset, retest, tick, extreme, perfectly scalped. And that's about it. So this guy looks great, but it is not our trade, not based on this. But it did put an end. So this is how you can do things. Hopefully you can do some research on your own. You may have better Heikin Ashi representations. They're all free on the internet. You can, this is Thinkorswim. Everything is what I've given you is free. Everything is free. You just have to see. You may find better luck with SPX, or you may want to get even smarter. You can put same thing for SPY, QQQ, DIA, IWM. So you have 4 markets. They're all moving in the same direction. You have a much bigger bias, but you do the same thing. You want to use 5 minutes, 15 minutes, all those things you can check it out. But I gave you an excellent approach to find and take the direction. And most people, if you get the right direction, they can pretty much make good money. Thank you very much.